Hello, welcome to Pre-Market Report, April 12th, 2023. Big day today. We have the CPI number, and quite frankly, I don't know what that number is going to be. Is it going to be lower? The answer is yes. How much? I do not know. The market is going to have, I think, a violent reaction one way or another. The course of action today is if there is a pop because of the number, I plan to trim some positions, sell the rip. Okay, that's what I plan to do. If there is a dip, a crash, a big dip, I will plan to buy the dips. The question is what to buy or what to sell, right? In either scenario. So let's see how things are going to play out. First up, we are looking at the TLT. And right now, the consensus is about a 5.5%, 5.3% as far as inflation rate. Core inflation consensus is 5.5. Hard to say, I think it's gonna be right there. I can't imagine why it would be much difference. I think for the most part, the way the government compute the CPI data is not the way I would compute it. I disagree with how they do it, but it is what it is. If we have something that meet consensus, I think the market will have a pop, but then it will sell off. That's just the way it is. So whatever the first reaction is, if it's a pop, it likely will give back later. If there's a dump, it likely will recover later. So whatever the first reaction is in the market, it's likely to go the opposite way after. For now, TLT. I had 3 cover calls last week that got called away between 107.5 and 108. I got 3. I saw a lot more. I saw a call in 109 and even 110. I have bought back a portion of those shares the last few days below 107. I also sold puts below from 107 all the way down to 105.5. Should there is a dump on the CPI number when the market open, I will look to sell put in the 105 all the way down to 104.5 range if there is enough juice. Okay, so gotta act quickly because the option market, the best time for those that watch me regularly, the best time to sell puts is right at the open. So what I would do is if I see a big dump, I would put in pre-market order of puts at the strike price where I want it to be with a big premium number. Um, you know, it's a guessing game often because you never know how big the dump is, but for sure I can catch some nice put action at the early dump. So that's my plan is if there's a dump based on a number, I will look to sell put in the 105 down to 104.5. Sell some more. I have enough capital to sell a bunch more puts down here. So that's TLT. As far as sell the rip, I have no plan to do anything. If the pop is big, would I then sell 110 cover call? The answer is yes. Okay, let's take a look at some indices. I'm gonna keep it short and sweet today. No need to keep it long. We are near the area where I think the path of least resistance is lower because earnings season is here. Outside of the CPI, as I mentioned already over the weekend report, that we have earning. I'm always cautious into earning, especially in a weak economy, because you likely will see earning miss, guide down. So why step in front of a train, right? What make you think earning this quarter is going to be better than last quarter? If you have the answer, type below, because what's the reason? Is the economy weaker this quarter than last quarter? I think most people would say yes. So why would earning be better? So the best course of action is, of course, be cautious, not trying to front run the market and buy into company because you think earnings can be good. So the SPY, um, if the market dump below the low of the last week, when you have this range down here, I think it's easy to predict that the 50 MA is going to be tested. Okay, so if you're short, I would say look to take your profit right there, right? So if you're short, don't be greedy. Take your profit. If you short the market, right, and the CPI pop, be careful. It can run, right? Sure, it's not going to run very far, but can it run to 418? Yeah. So if you can withstand the pain, okay, to me, if you're not short, the better time to short is up here. If the market pop because of the CPI and you want to short, that's the spot to short or buy puts up there. The area of resistance, QQQ. It's at the area of resistance right now. Okay, it had its run. I spoke about it over the weekend. Not a surprise to see it struggle here. To me, there's no need to be in it. I already have enough exposure with Meta and Google. That's the only two big tech that I have exposure in right now. I don't have any. Well, I have a bunch of put spread on Tesla, but I don't have anything on Microsoft or Apple. But if you have that, I say it's time to go on a lot of those. As far as QQQ, if you have it, hopefully you set your stop, but be ready for a retreat. I mean, the 50 MA is not that far below. Okay, the 20 MA is not gonna. It's very easy to test that. For me, it's better to be out of the QQQ here. Speaking of FANG, let's take a look at some FANG. Microsoft, I spoke over the weekend. It's time to go, right? It's not much left. The path of least resistance for many big tech is downward. I have raised my stop on Google. I have raised my stop on Meta. Where's my stop? Low of day yesterday. Okay, it was the 20 MA. It was the 20 MA, but I raised my stop on partial of my Google position. I have a lot of Google, but I raised it on 25% of my position on the low of day yesterday, so that if there is any kind of big dump, I don't mind getting stop out and then buy it back at the 20 MA. Hey, it's $2. $2 is $2. I don't care if I'm saving 2% by getting stop out and buy it back down here, but I would. Would I love to buy it back at the 200 MA? Heck yes, another $1.50, right? So yes, there is a stop there. I would put another stop at the 20 MA should this violate it, because if the 20 MA is violated, I think it's easy to see the 200 MA. So that's my plan, is set my stop and then set my limit buy order below, okay, to buy those shares back. Meta, same thing. I have raised my stop on Meta where low of day of this day, the previous day, which is 210.66. That's my stop. Same thing. I got an order in to buy back those shares $5 lower. So I'm not gonna get back $5. So stop me out. I buy it back down here. I would sell puts down here. Okay, if for those that want to play the sell put game where the gap fill. See, it's a gap right here. If you want to sell put at the 180, going out 2 weeks, that might be a decent play to get some premium down there. Should there's a dump in Meta, hard to imagine. I think if you sell puts at the 180 or 182, even 183, you have the 50 MA and the 20 MA above to protection. Okay. Speaking of Tesla, yeah, I sold a bunch of Tesla's put spread, and that's fine. I'm fine with where they are. If there's a dump today in the market and Tesla pullback, I will sell more put spread at 165 and below for next week. Okay, I'm using the 100 MA as my protection should there's a dump, and then sell put spread at 165 and below because that's the ref low. I think buy will come in between the 100 MA and the ref low to buy the dip. Yeah, no need to chase. Let's take a look at banks. I contemplated selling some of my Bank of America yesterday. It was a tough decision not to do it because I'm just like, I like my odds. I like the risk here on Bank of America. It break out over the 20, and if the CPI number is favorable, I do see a quick move to the 50 MA back into this range. Okay, back into the range where it was a key support area for a long time. So that would be the spot to trim a lot. At least half my position would be in this range here. So for now, I'm okay holding. Is there a downside risk? Sure. But I like the risk reward on holding here. I did trim some Goldman Sachs. It reached this level of previous resistance. The last 4 times it's been here, it got stuck. So I took the Q and trim a little bit. I trim a third. So I don't have a big holding, but still I did took off some. Would I buy back those shares? Yeah, down here, 20 MA, I would. Would I sell or put spread? Yes. Where? 300 and below. 305 would be the highest. Okay, I use this area right here as my reference low, ref low as I call it. So yeah, I trimmed some. Lastly, on the banks, KRE, I did not trim. I bought it low enough that I'm in profit on KRE, but it's a small position. I can risk holding it. In the end, as far as my decision making yesterday, I said, well, it's a small enough position that I'm okay to hold it if there is one more shoe to drop in the regional bank. But I do think the bank crisis is not as bad. It has literally 3+ weeks now to play out. Okay, so it has stabilized, and if there's no more shoe to drop in the next 2 weeks with bank earning coming out, I think we can have a nice chance of getting a 10% plus return on KRE. Tall order, but I like my risk reward there. Let's take a look at healthcare. It have had a great run. Okay, if you bought healthcare, UNH, ELV, Humana, even Cigna. I bought some Cigna on the dip down here, and I took off. I liquidated my small Cigna position. I have never traded Cigna before, but I look at the chart 2 weeks ago and I like what I see. But now it's time to go. Okay, but same thing with UNH. If you have UNH, certainly it's time to trim all the way up between the 100 and 200. But if you still have some, 528 would be the spot. This was the long-term support. Okay, if you want to look pan out, let's pan out the 3 years. Okay, see this orange line? It's key support, key support, key support. It likely will be key resistance going forward. Okay, so if you're trading UNH, that is the ultimate spot to say bye-bye. Okay, I already said bye-bye on the way up, but that's where you should say bye-bye. On ELV, I still have some ELV. I did trim more on this pop here. Where next? If we see anywhere near 509, yeah, no brainer, right? It's already a no brainer to sell a lot. I sold more than half my position already here. The risk reward now is balanced. There's enough risk drop all the way down to the 20 MA, and the upper range is between 510 and 520. Okay, it's not much left. Not much left in the tank there for ELV, but for sure, don't be greedy. Don't overstay your welcome. Cigna, right? Look at Cigna. I like Cigna. I still like Cigna, but I liquidated my small holding right here. I bought it down here, so it was a nice gain on a small position. But if this hold, I'm likely to sell puts at 260 and below, and then even buy some share on the dip, because I think there's room to run between the 20 and the 50. Okay, that's a nice 8% move up there for Cigna. It's a more attractive chart compared to ELV or UNH or even Humana, right? Same thing with Humana. If you have it, this long-term support is going to be a key resistance. So don't overstay your welcome. Definitely take your profit at 543, 544. Get out. Stay on healthcare, LabCorp, key resistant here, right? It's time to go. If you have it, trim for sure. It's a little bit more room, maybe, but for me, it's time to go. At the least, raise your stop to low of day, okay, of yesterday. DGX, getting close, raise your stop for sure, but anything near 145 is a sell, right? Time to go. It was a nice run for those that bought the dip, but it's time to start thinking about leaving. I'm out of Coca-Cola. Sure, can it run to 64? Yeah, but my position, I bought down here, okay? I bought Coca-Cola 60 and below, more like in 59. It was a very nice gain. I'm not gonna sit here and try to squeeze another dollar up here. So I'm out. I'm out of Pepsi as well. If you have Pepsi, wow, what a nice run, right? I thought for sure it's gonna run out of steam up here in the 179, 180, but it keep on going. Can it go to the all-time high, upper range? It can, but what's the reason? Is there a reason? Is earnings gonna be a blowout? I don't know. So for me, the risk reward right now is take your profit, take your gain. Okay, yes, there is a little bit more to squeeze, but I'd rather not be in it. Pepsi's not cheap, Coke's not cheap. All these staples, the safety play, are not cheap. McDonald's, it's time to go. Right? Look, resistant, resistant, breakout, fail, resistant, resistant. It's time to go. Nice run, incredible run, but it's time to go. McDonald's is not cheap. Let's see what I like. Lockheed Martin, I sold most of it. Okay, this is the area where it has failed this range between 490 and 498. Okay, you can see it. It's clear as day, right? It's time to go. If you have Lockheed Martin, it's time to go. Not much else to say. You know, it was a good trade. I would consider buy it back where the 20 and the 50 MA meet, 474, 75. That's where I will return to the scene of the crime. But for now, it's time to go. Take your profit. Not much else to say there. Energy, it's time to go. Okay, if you have energy exposure, look, it's time to go. It's been in the area. This has been the area. This is the top end of the range. Okay, it's very clear. It's time to go. No need to be greedy. Okay, if you trade USO long enough and you buy it in the low 60s, you can make money selling at near 70 or around 71. If you get 70 to 71, get out. Okay, it's been that way for the past 6 months. There's no reason to stick around. Same thing with Oxy, top end of the range. Okay, no brainer. I'm all out on Oxy. I have no energy exposure, none. If you look at LNG, I said it's time to go last week, right? Too soon to buy back. Would I buy LNG again down to low 140? Yeah, but it need. To me, the risk reward is just not worth holding it here. CTRA, if you have it, it's time to go. Okay, it's really time to go. Look, it's been here before over the past 4 months, and it had get back a lot. Okay, so if you have it, it's time to go. Let's touch on MLM, Martin Marietta. I sold more for sure. This gap fill right here is a small gap fill at 346. I have an order to sell at 348. Okay, so if there's any kind of spike to 348, I will be selling, and then for sure I will sell the rest 350. Okay, 351 is my next sell order. So 348, 351. I'll be out of MLM. I like VMC more, the competitor. I like this support trend line. It's riding it right now. So yeah, out of the two, I like VMC a little bit more. But if you have it, keep your eyes out on the 200 MA. That could be a level of taking profit right there. Yeah, for sure, take your profit up there. Gotta do it. Okay, gotta do it. Let's see. Let's take a look at Pharma real quick before I go. Eli Lilly, it's time to go. Right. I have half of my position left. I trim on the way up. I set my stop low of day on this day. So I trim some more the last 2 days, and I'm down to half of my position compared to how much I have down here. And I'm okay of keeping those shares for now. But I do have my stop in. Okay, I raised my stop on the rest. Where? Here. 358 is the rest of my stop. Okay, if it's violate that, I don't too much below. There's no way I want to give all the way back to the 20 MA. So I did raise the rest of my share to 358. So that I don't give back a big chunk down to the 20 MA. I'm holding on to Pfizer for now. Certainly this is a key resistant, but I'm holding on to it. I think it can break out. I will sell for sure at least half of my position if it see anything near the 100 MA. So I'm fine there. I did take some profit on JSK at 38.10 when it got here on this day. My order to put it to sell to trim some. I trim 1/7 of my position. I had 700 shares, and I took off 100 share right here. Had to do it. It's in the money. Okay, decent profit because I buy them down here. I buy many of those shares over here, trim some, bought them back here. So yeah, it's time to take some profit. If it get back up into the 38 area again, I will sell another chunk. FV, I have no position, but if you have it, raise your stop. Okay, it's near the area that can it run to 170. First, it need to get to 167. Okay, 168. The last two times it got there, it settled off. So if you have it, for sure, set your sell order 167 between 167 and 168 because I think sellers will come in size. All right, because look, the last time, oof, that was ugly. All right, so can it repeat? Yeah. If you don't pay attention to history, you will look like a fool. Let's take a look at one more. Or let's take a look at the medical device. I like Edtronic, but it's definitely a trim. Okay, I trim some up here on this day. No brainer, right? Would I have my stop? Yes. Where? I think using the 50 MA as a stop may be a wise thing to do. But it's hard, the problem with setting stop on day like today or yesterday is that it's so tight to the moving average that any slight weak would have knocked it out. So I'm gonna wait until the market open. Depending on what the direction is, I might sell it outright because I think if it violates the 50 MA here, it can easily go all the way back down to the 20 MA where I would buy them back. So I don't mind selling out at 103, between 103 and 102, and sell a put at 100 or 99. Okay, it's easy for me to sell the rest of my share and sell a naked put down here. Not hard to do to buy those share back. I like Abbott. I like Medtronic. Same thing here. I add to Medtronic, but if I see 81, if I see the 50 MA, it's a trim. Okay, the last time it got here, ugly rejection. So until proven otherwise, you have to take the history and trim some. But if it can break out, if it can break over the 50 MA convincingly, then yeah, we can see 84. Yeah. EW, I have trim. I trim at 83 and above. Every time, as you can see, the last time it got here, I didn't do it. Well, I didn't do enough. I sold a little bit and then I regret not selling more. So this time I sold more. If I see 84, you betcha I will sell a whole lot more. Okay, so for now I'm watching it. My stop 20 MA, right? I bought those shares well below in the my cost average is mid 70s, so there's a lot of profit. Okay, I bought a lot of Medtronic down here. EW, I mean, I bought a lot of EW on the dump, so a lot of those shares are in very good profit. So I'm protecting my game with the 20 MA. Okay, for sure I will trim into 84, but I'm not giving back below the 20 MA. No, no, no. Let's see. Let's do one more. One sector that I forgot so far. Walmart, big box. Okay, it's time to go. If you have exposure to Walmart, it is time to go. Raise your stop. Target, it's okay. I like Target here more than Walmart, but you at least should use the 50 MA as your stop, okay? Easy to buy at the 20 MA below. But for me right now, raise your stop to at least the 50 MA. Can it run to 179? If it does run up there into earning, sell. Last one for the day, Costco. It's a sell, okay? Look, the 2-day moving average, sell, sell, sell. Okay, it's very obvious on all of these wick that seller came right in. So now you got up there. Okay, to me it is a sell. It's time to go. If you have Costco, get out. You can buy it back for 75 and below. That's what I'm doing. If Costco dump today or whenever, sell put spread 470, 450, right? Use the red flow as your protection. Okay, the last few times it get down to the low 470, it bounced, right? Look, it bounced, yeah. So use that as your bogey to sell your put spread. I rather do, 465, 450, so that any kind of big wick down or big down move, at least I have some more protection. So highest would be 470, but I prefer 465. The gap fill is way below. See, there's a gap fill here. There's a gap. Okay, there's a gap at 457-ish, 456. So if we have a big sell-off, in a big correction in the market in the next couple of weeks into earning, because earning season is terrible, it can happen. Okay, so be careful. Earning season is here. Don't front run earning as if earning is going to be booming. It's not going to be booming. That's it for today. Thank you for watching. Bye bye.